This is what happened when Adam tried to teach himself to golf. When he tried to teach himself Kung Fu. And when he tried to teach himself to cook. Careful, babe. So when Adam wanted to learn the tap dance, he decided to mirror an expert. That's why when it comes to learning to invest in the stock market, Adam uses the new Mirror, Learn, and Trade platform on Bursa Marketplace. He just needs to register, choose from a selection of analysts to mirror, learn how they manage and strategize their portfolio, and mirror. Put 100,000 virtual ringgit. Sign up on bursamarketplace.com. And just like Adam, you can start your investment journey today.
Hello everybody, welcome to this Kenanga webinar with the title Making Friend with the Trend. Today we are very excited to bring to you this webinar, Making Friend with the Trend, brought to you by Kenanga Investment Bank in collaboration with Bursa Malaysia and managed by Wealthford. Today we are very excited to invite a trend follower speaker, which I think he is now on the line. Hello, Jin Hao.
Hi, everybody.
Yeah, for coming online with us to share with us your trend following strategy. So this is like part 2 of your trend following part 1. All right, so welcome everybody, and hope all of you here are doing well. I believe that you can hear my webcam and our screen. If you can see our screen and hear us very well, please type yes in the Q&A box. All right, excellent. Okay, audio, video, webcam are working fine. So now, disclaimer, whatever we share on this webinar is only for educational purpose. In no way that we give any recommendation or any trade call for any buy or sell. If you decide to invest in any stocks, you do it at your own risk. Is that okay? Now, as I mentioned, this webinar is also in collaboration with Bursa Malaysia, and just now the video you watch is the Mirror Learn Trade video. You can find out this feature at the Bursa Marketplace website. You can, if you have, if you want to follow who are the industry people who buy and sell, Kenanga also has analyst there who is listed on the Mirror Learn Trade platform, so you can follow Kenanga analysts there who also follow their portfolio. Okay, so check out this Mirror Learn Trade if you need some, you need some guidance. All the steps are all on the Bursa Marketplace. Okay, what are Mirror Learn Trade, how you can mirror people and follow their portfolio. So this is the Kentrade webinar in Q3. So in the subsequent webinars, we have 3 more coming up, which is how to profit from melt up, the final leg up in the US bull market by Derek Tan, happening on 27th of August. So the second one is the worst is over, or more to come, by Mr. Ui Kok Hua on the 8th of September. And on the 24th of September, we have by Mr. Ian Tai, he will talk about FMB stocks power talk. So this is the remaining Kentrade webinar in Q3 in 2020. So make sure you mark down these dates in your calendar so you won't miss any of our webinars. Now, allow me to introduce the speaker to you today. Jin Hao is a trader in the capital market, trading equities and futures, mainly Malaysia, US, and Hong Kong markets. He is the founder and chief master trainer of Street Finance. He also has a signature Street Trader Intensive program, and he spoke for investment banks, universities, and private entities as well. He is also often featured in the media such as City Plus FM and Borneo Post. So Jinhao, are you ready to rock the house tonight?
Yes, yes, sure.
All right,
Right.
your audio is a little bit soft though. Would you want to
Okay.
adjust a little bit?
How about now?
Just now when we did the testing, it was great.
Okay. How about now? Is that okay?
Uh,
Better?
Still about the same.
Still about the same. Okay,
Yes.
okay. How about now? Because
Yeah,
I can see my
I think it
levels.
works fine now. Okay, I think it works
Okay, all
fine
right.
now. All right,
Okay, all
so
right.
let me make you a presenter.
Okay. Show my screen.
Yes,
Can you
over to
see my
you.
screen now? Okay, all
Yes,
right.
perfect.
So, hi everybody. So let's begin very quickly with the content outline. All right. So the first thing is we want to understand what contributes to your trading success. The second is strategies of riding big trends and how great money management skill can help us to control our emotion. And last but not least, I'll give you some cases study. So are you guys ready? If you are ready, then let's just jump into the content for today. All right. So
Ready?
yeah. Okay. Okay. So let's just jump straight into what I have prepared for all of you guys today. So the first thing is we want to understand the 3M of our trading success. Now, I did not plan this when I was preparing the slide actually, but I really want to point out something, which is right now the market is very hot. If you're in the market, you know what I'm talking about. It's like somebody else who never learned how to trade stock, who never learned how to invest stocks. They just open an account like last 2 months, and right now they're going to the market and trade. They're making few thousand ringgit per day, or they're making like 10, 20% a week, something like that. Now, we gotta understand that all this happens because right now the market is hot. Okay, we don't know the consistency of those traders yet. Okay, I have been through a lot of these kind of market situation whereby the penny stocks and all those, it's just like everything is on fire. Okay, whatever stock you buy, as long as it is the hot stocks you buy, it seems like you can always make money. But the key here is, can you, okay, be consistent when it comes to your trading result? Now, I know that it's going to be an extra profitable year if you're a good trader, but the thing is, how can you replicate or repeat this strategy and things of that nature? Because if there is something, okay, if you ask a trader who is making a profit now, if they cannot repeat what they are doing right now, if they don't have a strategy that they can like duplicate so that they can use it the next time so that they make the same amount of money, or they are in the so that they make money, put it this way, then if something cannot be repeated, that's not a strategy. Okay, now everybody can make money if the person, okay, has luck. Okay, when I buy lottery, if I'm lucky, then I can make money. Okay, I can win the lottery, but the problem is, can I repeat? So this cannot be consistent. So to be able to consistent making money in the market, we need skills. When you practice the right thing, when you have the right skills, when luck comes, you will achieve greater result. Okay, so this is what I want to share with you. So here's the 3M of your trading success. The first one, we talk about mindset and mentality. And I can tell you right now, the market is making a lot of people overconfident. Okay, I will just say this. The market is right now making a lot of people become overconfident. Why? Because they suddenly feels like, hey, stock market is a place to make quick cash, things like that. Okay, whereas you see a lot of professional traders, whereas you see a lot of professional investors, they are not as aggressive. Okay, so the first thing is knowing that the mindset and mentality is very important. Okay, and it actually accounts the most when it comes to our trading success. Next, we talk about money management. Okay, we talk about money management. Money management, I would say, that includes of like risk management, your trade management, and your portfolio management as a whole. Okay, now next, the only last thing we talk about is method. This is a strategy that a lot of people are obsessed with. Every time I share something in my seminars or Facebook Live and those sessions, people will ask, hey, what line you use this one? What line you use for that one? But no one ever asked me how many percentage of your capital is allocated to this position. Nobody ever asked me this kind of question. Okay. So that's the thing. Look at the pie chart here. Okay, look at the pie chart here. You can see that mindset mentality accounts 60% of our trading success, whereas money management is about 30% and 10% is about method. Okay, now I've met somebody in the past, like maybe 5-6 years ago. Some people come and ask me and say, hey, Jin Hao, I have a little bit troubles in trading. Okay, I say, what's the problems you're facing? He said, I took 5 trades this month. I took 5 trades this month. First 4 trades are making money. The 5th trade is losing. And I said, that's great because your winning rate is 80%. Then he said, no, Jin Hao, you don't understand. The first 4 trades I make money. The 5th trade, I wipe up all my previous gain and I still lose a little bit. So I'm back to square one minus like 10-20%. I said, why is this happening? So after talking more in depth with that person, the conclusion is this: does the person has problems with method? No, absolutely not. The problem comes in the mentality and money management because he is using all his money in one single stock every time he take a trade. The second is mentality, because the past 4 trades he has been profiting and he becomes overconfident, and when he was at the 5th trade, he become overconfident, the stock retrace, hit his stop loss, okay, and then he did not execute the stop loss, and in fact he buy more. So this becomes a problem, and if you do not control this well, I'm sure that a lot of people will face this very soon, because I believe that you all agree with me that the market right now, this kind of situation will not last forever. It will come to a point whereby things are no longer that bullish, are no longer that lit. Okay, so here's the thing, that the first thing I want to remind all of you guys is, don't stay in that euphoria moment for too long, and don't get overconfident. Okay, a stop loss is still a stop loss. A trailing stop is still a trailing stop. Okay, now the market, it seems like whatever stop loss you put, it will hit you out and then it goes back up again. Then it's like, why am I stopping out myself? And then the stock just run. Okay, so it will create this kind of situation, but bear in mind that we are in a market whereby everything is hot. Okay, so maybe adjust your stops a little bit. Okay, take partial instead of full stops. Okay, things like that. Adjust a little bit instead of totally throw your strategy and rules aside. Okay, so that's the first thing I really want to remind all of you here. Okay, now the next thing is how to ride a big trend. Now, I believe that most of you in this room are trading Malaysia stock. So Malaysia is too hot. Okay, let's just rest a little bit. Let us look at maybe some overseas stocks. Okay, now here I have one stock for you. Okay, this is Zoom. Zoom is the meeting software, the webinar software that a lot of people have been using since MCO, since this lockdown and self-isolation. And then if you remember, during somewhere around March and April, Zoom actually has some problems whereby they have the securities issue, the privacy, like they leak the data, and people are really like bearish with the stock. And then you see the trend is still going upward. Okay, so again, as a trend follower, the first thing that I can tell you is I disregard news. Okay, I don't look at news, I look at the trend. So you see, the trend is so nice. It's going up, and this is not the latest chart. If you look at the latest chart, the stock has recovered a little bit. So my question is, how can you ride a big trend? How can you bear with this kind of retracement? Because it is so good. Okay, it is so good that if you sell halfway, when you look at this chart, when you look at the stock, okay, retrospectively, you seems like, oh, I've missed a lot. So a lot of people ask me how to ride a big trend. Okay, of course, as a trend follower, I do not put a target price. Okay, how far the stock can go, I'll let it go. Okay, until it turns into a downtrend, then I will completely sell off all my position. So how to ride a big trend? The first thing is, first, of course, I follow the trend. Second, I do not put any target price. Okay, and later on, I will share with you more. Okay, how can you ride a big trend? Now, the best method is probably the method that you already know. A lot of people like to complicate things. Okay, when they start learning about EMA and all those things, they always want to find the EMA that is like tad accurate. The thing is, all indicators are actually just what we call is like past result, a mathematical result of past data, of historical data. So they are not very accurate. They do not predict the future. Okay, so don't get obsessed with all the indicators and strategies and all those things. Okay, the best method is probably the method that you already know. Okay, and the best method is probably the simplest method that you think is not good enough. Okay, I'll share with you two very simple methods. Okay, and it's very easy to follow. And the only challenge is the person when he or she or you, when you try to follow the method, you will realize that your greatest enemy is not the market, it's not the stock, it's your own emotion. All right, so let's move on, and I will share with you later how can you control, okay, your own emotion when it comes to emotion part. Now, the first I can share with you is very simple indicators that you can find using TradingView. Okay, a lot of people may not know this, okay, but now you know already. You can go to tradingview.com. It's free to use. The only thing is if you do not subscribe to their plans, you can only use 3 indicators per charts, and you have the advertisement that keep popping up, but it's okay, okay, but it's okay. Now, here's the super trend. Okay, it's very easy to see how to use this indicator. When it turns green, it means bullish. When it turns red, it means bearish. So if you follow the system, do you make money? If you follow the system, do you make money? You see, the first buy point occurs on January 2020. If you follow the system until now, how many percent is this? Okay, in the middle, you might sell off. Okay, maybe somewhere around here, you might sell off, but it's okay. It's okay. Learn how to buy back. Okay, because based on what you have seen in this chart, okay, all these are actually support zone. Okay, so when it pulls all the way back and turns up, you can actually buy back. Okay, there's nothing wrong to sell a stock too early. Okay, we can always learn how to buy back. But if you follow the system, when it goes all the way up, it means that by right, you still should be in position. And the how part, later I'll share with you, how can you use some of the money management tricks that I personally use to control a little bit of your emotion when it comes to riding the trend. So you see stocks like this, there is still no sell signal up until today. Okay, there is still no sell signal up until today. So is this indicator or system very tough to use? Actually, no. Okay, it's because a lot of people, a lot of time when it comes to using a system, we become very emotional. Okay, we tend to sell like when there is a big retracement and kind of things like that. So that's why I really have to tell you that don't get obsessed with the strategies or indicators that you use. Okay, so later I will teach you how you can use proper money management skills, some of the tricks to manage your emotions so that you have the confidence to ride the whole trend. Now, next, you are basically looking at the same chart as well. Okay, now you are I'm using EMA 20 and EMA 50 in the chart, and you can see that the buy point occurs on January 2020 as well. So regardless which strategy you use, most of the time you will get more or less the same result, the same outcome. Okay, so if you follow the system, you just use 20, 50. Okay, these two are very commonly used EMA. Okay, if you use 2050, can you make money? System asks you to buy somewhere around here. If you don't want to buy every time, okay, we all know that EMA cross EMA works like a support as well. So every time it pulls back to the EMA and it turns up, there is an opportunity to buy. Now, I like to think EMA like a magnet. Okay, like a magnet. Whenever the stock or any securities you are trading is going away from the EMA or MA, it will pulls it back so that it is near to the lines, the MA or EMA that you are using. And when it pulls back and it turns up again, it shows you like this. It pulls back and turn up. Okay, it pulls back and turn up, pulls back and turn up. It means there are actually buying opportunity, because when the stock rebound after it have a series of retracement, it means that there is a sign of uptrend continuation. Okay, so if you do not buy at the first crossover, it's fine. Okay, you have to know that stocks will not go up forever. Okay, it will not go up forever. There will be time whereby it will start to pull back. So after the pullback, you can always relook into the stock and see whether or not you have some opportunity to enter the stocks. So if you see, you use super trend indicator or you use the very classic EMA or MA crossovers, you get a very similar result. Okay, so just any indicators, any strategies that you use will work. The only thing is, how well are we able to follow the system or the indicators that we are using? Okay, so here's the problems with most traders. The first is, system asks them to buy, they buy. We are very good in buying stocks. Okay, do you agree? We are very good in buying stocks. The problem is, when they are in profit, when we are in profit, like for example Zoom, like for example maybe your Top Glove, maybe your Hata Trade, the system does not ask us to sell, but we sell. Why? The psychology behind it is because we have the fear of losing profit. Most people become more risk adverse when we are in profit. Okay, now next, if the stock continues to rally, okay, for example, the stock continues to rally, the system never presents a good buying opportunity, but people still buy. Like what's happening in the market right now. Every day, I receive a lot of PMs and DMs asking me, hey, Top Glove still can buy or not? Care Plus still can buy or not? Notion still can buy or not? SRM still can buy or not? Okay, why? The system never presents a good buying opportunity, but I don't know whether those people have a system at first place or not. Okay, but the thing is, a lot of time the system never asks us to buy, meaning that there's no pullback near to EMA or there's no pullback near to super trend, but people buy. Why? Because there's a kind of fear of missing out. Okay, I call it FOMO. Okay, fear of missing out. Okay, because your friend is already in maybe stocks like Notion, limit up 2 days, and you have the fear of missing out anything. So that's why the system never asks us to buy. We tend, okay, the hand very itchy, we want to buy. Okay, but the system never presents any good buying opportunity. Last but not least, system asks us to sell, but we end up don't sell. Why? Because those people, when they are in a euphoria mode, okay, system asks them to sell, they would think that the market is still very bullish. They have 1,000 excuses to convince themselves not to sell, and they have already buy it, and what they are using is basically buy and hope strategy. Buy and hope that the stock will go up in the future or the stock will recover in the future. So here are the problems with most traders when it comes to discipline. Okay, when it comes to discipline, especially like what I have told you guys in the beginning of the sessions. Okay, right now the market situation will mess up a lot of people's emotions and things of that nature. Okay, the market is making a lot of people become overconfident. Okay, some people even go and borrow along money, okay, to trade. I don't recommend that. Okay, so better don't do that. Okay, so just that the market right now, it's just all these people in the market, they are overconfident. Now, the next thing I want to ask you, will you lose money if you follow the system? Now, this is one of the Malaysian old-time favorite stock, Genting. The first thing is, if you are familiar with moving average, you know that EMA 200 is like the last layer of defense. Any stocks that break below EMA 200, it means that it is in a long-term downtrend. When something is in a long-term downtrend, as a trend follower who practice trend following, we believe that in a downtrend, it has higher probability to go lower rather than go higher. So that's why we usually, most of the time, we don't mess with downtrending stocks. Now, here's the thing. If you follow the system, let's say you use EMA, at first place, you wouldn't buy these stocks. Let's say you use super trend or a combination of both, or you are really itchy. You buy when it shows buy, although you know that it is still below the 200 days moving average. If you buy where system asks you to buy, and if you sell when the system asks you to sell, from this trade, maybe you break even. Okay. And then you avoid this crash. You avoid this crash. And here, system asks you to buy. Here, system asks you to sell. Will you lose money if you follow the system? Sometimes you will, but what I can guarantee you is you will not lose big money. Okay, indicators are still mathematical result of past data. They are not very accurate, but if you follow the system, you will not lose big money. Okay, there are only 5 results when it comes to trading. The first is you make big money. Second is you make small money. Third is you lose small money. Fourth is you lose big money. Fifth is break even. The only thing that you need to avoid is lose big. Okay, you have win big, win small, lose big, lose small, and break even. You only have to avoid lose big. Okay, so if you follow the system, you will, technically speaking, you will not lose big. Okay, a lot of people that lose big because they do not follow any kind of system. They are usually emotional driven. This one, Sapora Energy. If you follow the system, will you lose big money? I believe instantly you can already tell the answer. Okay. Last time, I remember when it was around, I think it's like 30 over cents or around 30 cents. A lot of people are speculating that this stock can recover. However, if you look at whatever EMAs, if you look at super trend, it actually asks you to sell. Okay. If you buy here, you must sell here. That's the system. Okay. And then after that, boom, it goes down. Okay. Until today, there's no buy signal. So will you lose big money if you follow the system? Will you get stuck in a stock that is not performing? Okay. The answer is definitely no. Okay. Now, next thing, let's look at one stock. Now, this is the stock that I'm holding. Okay. Hata, where is the sell signal? Beginning of this year, it shows a buy signal. And after that, it pulls back to somewhere like 50 or 20 EMA. It seems like it always retrace back to 20 EMA, somewhere around here as well. And it just go all the way up. A lot of people have been selling, especially today. Okay. However, if you look at the stock today, I don't have the updated chart right here, but you can go and check. Hata Lega today, it goes down. Okay, it went down and hit 20-day average. It hit 20-day average and rebound and close back to around 20 ringgit region. Okay, so is there any sell signal yet? The answer is no. Okay, the answer is no. There's still no sell signal yet, and that's why I am still in position. Okay, Hata Lega is one of the stocks that I'm holding. Okay, so as well as the stock that is contributing the largest profit to my portfolio this year. Okay, so there's still no sell signal yet. And again, a lot of people sell because of fear, because of this and that. But if you follow the system, you can instantly know that there is no obvious sell signal yet. Okay, it does not even break below the 50 days average. Okay, because if some stock were to break below the 50 days average, that would be when I would maybe cut my position. Okay, but right now everything is still above 20 day. So I look 20 day as a short-term average. Okay, because it's 20 days, it means 1 month. It's a 1 month average. The stock is still above 20 days average. So it means that it's still extremely bullish on the short run. So why not keep holding? It doesn't, I don't guarantee that it will not crash from where it is right now, but I also don't know that whether or not it will go up to maybe 22, 23, or 25. I don't know. I just follow the trend. Okay. So because the core belief that trend follower has is uptrend will have a higher probability to go higher rather than goes down, and downtrend has the higher probability to go down rather than reverse back up. So we walk the talk. Now, this is an old screenshot. I screenshot on the 28th of July. Just that when I'm telling all those things here, I don't want to make you feel like I'm just talking. It's like nobody can hold from the beginning until the end, especially if you're a trader, because I'm a trader. I don't call myself an investor. Okay, I'm a trader when it comes to all these stock kind of things. I do have investment portfolio, okay, but those are really, I put there, do nothing. But this is definitely for trading. And my cost price, my average price, not my cost price, my average cost price is 795. Today it closed higher than this. That day when it goes above 20 something, it did hit above 200%. So this is just one of the stocks that I'm holding. Now, if you want to see more screenshots, you are welcome to follow me on Instagram, because from time to time I do post 1-2 screenshots there. Okay, just for you to know, for those who like to see. Okay, now let's go into the tactical part, plotting entries and stop loss. Now, the first thing is the initial entry, meaning that the first entry that your system or whatever indicators it presents to you, it is always the beginning of the trend change, meaning that it changed from either sideways or downtrend to an uptrend. It could be an EMA crossover. Maybe your 20 cross your 50. Maybe your 20 cross your 40. I don't know which one you use, okay? But you get the idea. Or it can be your super trend, okay, your super trend change from red to green. Okay, so the initial entry is always the beginning of the trend change. That is the first entry that the system shows you. Okay, now every time the stock pulls back near the support, it can be your EMA 20, it can be your EMA 50, it can be when it pulls back near to the super trend. Okay, near to the super trend line. Okay, watch for a rebound, meaning that it must touch or pierce through or somewhere around the support, and then it goes up. It rebound. Rebound after pullback is our subsequent entry points. You can have multiple entry points after the initial entry points. Okay, so there are multiple entries to actually buy the stock. Okay, now stop loss has to be plotted either below the previous low, meaning that the pivot low, that waves low, or your short-term moving average. For example, you are buying when some stocks bounce off the 20-day average, then your stop loss can be below that moving average. It can be below that moving average, or below super trend if you're buying using super trend, or whatever you're using. You might be using trend line. You draw trend line. You draw trend line normally. It can be below the trend line as well. It can be any support resistance level that you draw. It can be whatever indicators you're using, Ichimoku, anything. Okay. The best strategy is the strategy that you already know. Okay. Now the stop loss should not exceed 10%. Now this is my personal rule. Okay. Ideally around 8%. And again, just to let you know that I don't trade penny stocks. Okay, I don't trade stocks like Sanichi. I don't trade stocks like PDZ, Lambo, AT. Okay, I don't trade these stocks. Okay, because my goal is to follow a big trend. Okay, to follow a big trend, and I don't really expect a 5 cents or 10 cent stocks can rally to like 1 ringgit, 2 ringgit, although there could happen, but I prefer to trade stocks that have like history of rallying, just like US. I'm looking at stocks like maybe that has like 10-year runner, that's what they call, okay, something like that, like maybe Adobe, those stocks, okay, whereby they have past healthy rally record. Okay, I prefer those stocks. Just like in Malaysia, I prefer to trade, to buy stocks like maybe Pentamaster, like DoFood, like QL, like Sintex, okay, because they have a healthy rally record. If you look at stocks like AT, the record is only pump and dump. So things can happen again. Yes, you can make money when it is pump, but can you dump it earlier so that you don't end up stuck in the stock? Okay. That's why that's my personal preference. Okay, no right or wrong. I know that right now penny stocks is making a lot of people making money, good profits. They probably make more money than me, but I have my own goal when it comes to trading. I want a consistent profit year after year, and I want to grow my trading portfolio bigger and bigger. Okay, so that's the way I look at the kind of stocks that I look at. Okay, in US, I look at stocks like Zoom, like C Limited, like Adobe. They are reputed company, and the chart just look nice. There's no pump and dump history. And Hong Kong, I'm looking at stocks like Tencent. I'm looking at stocks like Meituan Dianping. Okay, so those stocks. And Malaysia, I'm looking at stocks like I've already mentioned just now. They have healthy uptrend record. They don't have any pump and dump record. Okay, so now you move your stop loss higher once the stock has a new wave. This is what you can do. Okay, let's say you buy a stock at maybe 2 ringgit 50 cent, and your initial stop loss, for example, is 230. When the stock move up to 3 ringgit, you might want to move your stop loss from maybe 230 to 270. Okay, so that's what I call moving up the stop loss. So basically, I only take all profit. I only run from the stocks when my trailing stop got hit. Okay, like Hata Lega, my trailing stop is below the 20-day average. So that's why right now it has not even closed below 20-day average. So that's why I have not clear my position. All right. So these are the things that you might want to drop down, okay, because these are the key things when it comes to plotting your trading plan. Okay, now let's look at Microsoft. Okay, just recap on the strategy that we are talking just now. First thing, crossover. So you see, crossover is always the first point it shows you can buy. Okay, so here is the first buy point it shows after the flash crash in end of February to March. Okay, this is the first buy point. If you did not buy right here, you want to wait the stock pullback and rebound. Okay, you want to wait the stocks pullback and rebound. You want to wait the stock pullback and rebound. You want to wait the stocks pullback and rebound. Want to wait the stock pullback and rebound. And here it pulls back and rebound. And then if you set 20-day average as your stop loss or trailing stop, that's when you get stopped out. And again, if you relook into the strategy, okay, you will only make loss if you enter on this wave, you buy here, and you got stopped out here. That's the only possibility that you will be stopped out from this stock, okay, if you follow whatever I have shared with you just now. And this is what I personally use. Okay, I bought Microsoft at somewhere around here when it turns up. Okay, I bought it somewhere around here. So yes, recently I did got stopped out. Okay, so I stopped out at somewhere around here. All right. So again, is that a profitable trade? Definitely yes. Okay, I'm in profit, and the only regret is, of course, I do not buy as early as somewhere around here, but somewhere around maybe here. Okay, but again, am I profiting from this following the system? Definitely yes. Okay. So next, we look at Shopify. Again, Shopify, fantastic stock. Okay, first entry here. Okay, somewhere around April. Okay, next it pulls back to somewhere around this region. If you enter at this rebound, you set a stop loss below here, you will not get stopped out. So again, you follow your trading plan. Okay, it goes stagnant for 2 weeks, about there, 2 weeks, but at the end, it still goes up. Okay, so again, if you put your stop loss below the 20, you might have already got stopped out, but it's okay. You can always plot a new entry. Okay, so if you follow this system, okay, definitely you can profit from the stock. Now, next, Malaysia stocks. We look at UWC. Again, first buying point. If you're not comfortable because that time the stock is like quite high already, it's okay. You can see that the stock actually pulls back to somewhere near this region and goes back up. And recently, decide yourself and remember the disclaimer. All right. So again, remember disclaimer, this is not a buy call. I'm just sharing from whatever I see from the chart. All right. So it works in all countries. Okay. Regardless what country stock you're trading, Singapore stocks, US stocks, Hong Kong stocks, Malaysia stocks, it works. Okay. Now, next, SCGM, damn crazy. Here is the buy point. The first initial point whereby it tells you that I am in an uptrend. Okay. So next, it crashed to, sorry, I don't know why it becomes like this. Okay, but just let me pull. Okay, it crashed, not to say crash, but it drops to the sort of like the EMF 50, okay, the medium term support, I always call, and it goes back up. So this bounce is an opportunity for you to buy. Okay, and here it pulls back to somewhere near 20 days. Here it pulls back near to somewhere near 20 days and go up again. So in fact, these stocks, if you follow the strategy, that the simple strategy that I've shared with you just now, okay, you will be in the profit side. And is there any sell signal yet? The answer is no. But of course, I understand that you will be tempted, okay, to sell. So that's a problem, okay. When the stock goes up quite steep exponentially, okay, quite steep, we always have we always want to sell because we become risk adverse, okay, when we are in profit. So that's the reason why money management can come into play, okay, to compensate this emotion. Because if you are in SCGM, definitely you would feel like selling these stocks, okay. And right now the price is definitely higher than where this chart is presenting, okay. So again, money management can control this, okay. Later I'll share with you how. And again, just the last example here, I think Syntex crossover here, pulls back to 20, goes up, pulls back to 20 and 50, goes up, pulls back to 20, rebound, you can buy, pulls back to 20, rebound, okay. So QL, same thing. The first crossover, first opportunity, and after that, boom, go up, and then boom, goes down again, correction, and go rebound, you can buy. It pulls back to 20-day, you can buy. Pulls back, okay. So now, how do you ride an extreme big trend? Okay, because this year is a year whereby there's a lot of big trends, and it's not only this year. There will be more big trends in the future. Okay, the only thing is you have, as a trader, if you want to win this big trend, you need to know, you need to have the skills to actually know how can you control your emotions so that you have the confidence to continue holding. Okay, so as traders, our emotion is our greatest asset. Once our emotion got crashed, you can no longer make money. Okay, so that's why when we have losing streaks, we take a rest. Okay, take good care of our emotion, okay, because our emotion is one of the key to success. use great money management to compensate our emotion. Diversify. That's at least the simplest thing you can do. Diversify. Don't all in into the glove and healthcare sector. Why not diversify into tech sector? Why not look into other sector? Okay, so that's the thing. Second, understand that you don't have to ride the entire trend with the full position. For example, if you buy top glove and at ringgit, you buy 2 lots. It doesn't mean that you have to hold all 2 lots until now. Okay, when the stock goes exponentially high, it is very steep. You can always trim down your position until you are comfortable to keep holding, because the system has not asked you to sell. Okay, so position out too early will make the trader fall more once the stock starts to rally again. Now, I want to explain about this. You see, a lot of traders, okay, when they sell too early at maybe they sell Hata Lega at $9, $10. Not a lot of traders, unless the very experienced and professional one, when it rebounds to maybe 12, 13, or when they see the next entry, it pulls back and rebound, they will enter back the stock with their strategy instead of relying on their emotion, okay, because I want to get back the stock, okay. So I have seen a lot of traders, okay, because they get out from the stock too early and later they see the stock keep going up, okay. It happens to one of my friends in Tesla, okay. So you really have to know that how your emotion will be under control, okay. So if you position out too early and the stock continue to run another 100%, you want to make sure, okay, if you did that, if you have the habit of taking profit, you need to be okay if the stock continue to go up another 50, 100%. You have to accept it. If you cannot accept it, then why not you sell half? When you sell half, your emotion burden is reduced by half. Okay. Now traders can either first sell on extreme strength. You can take half profit first. For example, if you're in ES Seram, you don't feel good because it limit up for 2 days, for example. Okay. I have students who hold ES Seram. Okay. So if you feel that it is too hot, too high, like for example, right now, top glove, you can always sell maybe 25% or 1/3 of your position on strength, or you can sell on extreme weakness when there is one day it retraces a lot. Okay, there are 2 ways of doing it. Okay, third, traders can add positions once the stock pull back near to any support and rebound, meaning that you sell on strength, for example, and after that it goes up a little bit, then goes down, pulls back to maybe 20 EMA and turn up again. Okay, you can actually add some more positions. Maybe previously you hold 5 lots. Okay, you cut half until 2.5 lots, and the stock retrace back to any support and go up again, you might want to buy 1 or 2 more lots. Okay, you add some positions. The caveat here is make sure you will not end up with loss if your new trailing stop is hit. That's the only thing you have to make sure, because you don't want to turn a profit trade into a losing trade. Okay, so make sure you don't buy too much. Okay, remember, don't buy too much. If your existing position is 3 lots, don't buy more than 3 lots. The max is 3. Ideally, you buy less than that. Okay, now let's just very quickly go into the case study. Okay, the case study. Now, this is one of the stocks, okay, that my student actually are in it, okay, but I cannot show you the screenshot, okay, because this is Kenanga webinar. So, okay, back to the topic. This is an uptrend, definitely beginning of the trend. It pulls back very extreme and it goes up somewhere here. So we buy when there is a rebound, okay, and it is at the bullish region, and this is about 80 cents, okay. Now, next, you can see that after few trading days, the stock actually nearly limit up. So what I suggest is, if you don't feel comfortable, because you're in profit for 80 cents to 1 ringgit 10 cents is quite a lot already, okay? Because that time we never know RubberX can go up until where it is today. Okay, so when there is a limit up, you take partial, whatever you're comfortable with, half or 1/3, up to you. Okay, so that it reduce the burden, so that you have more confidence to keep holding. Okay, if it drops, at least you have take partial profit right on the top already. If it continues to rally, never underestimate the last 1-2 lot that you have left there. Okay, it can create a lot of profits, okay, to your portfolio as well. Okay, now next is, you see, this is the previous one whereby you look at my cursor, the laser here, you can see that we profit 38%, okay, from that movement. And surprisingly, RubberX go all the way up. You can see that here, from here to here, okay, it is extreme strength, okay, and we are up by 300%. So what we can do to reduce the burden is, the emotional burden is, we sell on extreme strength, or we sell on extreme weakness, which is somewhere around here when there is a big drop. Okay, when there's a big drop, you can sell on extreme weakness as well. Sell half, because the system have not asked you to sell. But if you want to sell all, because you are in this stock already, you have like 300% profit, you want to sell all, is okay. Definitely okay. It's up to you. But you have to be okay with one thing. Uptrending stocks has higher probability to go higher. So that's why, if the stock continue to go higher, make sure you are not chasing the stock back based on emotion. That's the only thing that you have to tell yourself. Okay, so I take care of emotion very, very well, and I took it very seriously, because that's the thing that decide whether or not a trader can be profitable. Now, the next thing I can share with you is Hata. This is my personal trade, and you have already seen that I'm still holding the stocks. Okay, now I buy because there is a rebound from the 50-day EMA, and there's a triple bottom. So you have triple bottom and 50 EMA rebound. So this is my first entry. I buy on triple bottom rebound, as well as rebound above EMA 50. Okay, of course, the magnitude is a little bit very steep, and it closed at above EMA 20. Okay, but that's where my first position is. The next is, it has a breakout of 7 ringgit. This is a round number breakout. Okay, and this is how I top up on the breakout. Okay, because that time glove is still okay, not as crazy right now. Because right now I don't feel like topping up because it's too hot. Okay, so that time I top up on breakout. Okay, next is, you can see that on May. Okay, on May the stock actually has a pullback. Okay, May actually have a pullback. I sell partial right over there. Okay, and here I sell another partial right over there. So right now my Hata is actually only left 1/4. Okay, but this 1/4 is worth it, because the first thing is, I still have 1/4 of my original position. Okay, and it's still giving me great profit. Okay, I don't miss this great uptrend, and the emotional burden is way less. Okay, but you never want to underestimate the maybe the last 1 or 2 or 3 lots that you leave in the stocks, to just follow strictly the system. Okay, it can create a great impact to your portfolio as well. So I personally, I'm more towards the type of traders who like to take partial on extreme pullback. Okay, that is at least my personal practice. You just take it as a reference. You don't have to do that. Okay, if you feel like taking partial, okay, be it 1/3 or 1/4 or half, okay, based on strength, when the stock has extreme strength, you want to take some profit, is also okay. Okay, so that's what I can share with you. And again, one thing, as a trend follower, and as already tell you just now, I see EMA as a magnet, meaning that whatever it is pulling away from the EMA, it means that it is somehow overextended. So when it is somehow overextended, it will one day pulls back. Okay, the magnet, the EMA magnet, the MA magnet will pull back to where the MA is. That's what we call the correction. Okay, now when the stock is having an extreme movement upward, and my unrealized gain just suddenly spiked. One thing that I tell myself is, this unrealized gain is still an unrealized gain, and I don't treat it and I don't celebrate it, because this, I treat it as an extra buffer. Okay, I treat it as an extra buffer for me to keep holding the stock if a steep retracement were to come. Okay, I think that this kind of emotional management is very crucial if you want to ride a big trend. Now, this year, I already have 3 stocks that went up above 100%. Okay, one is Hata, above 200 already, but comes back down a little bit. And one is Skilful, and one is UWC. Okay, so every time when a stock goes very steep upward, I just tell myself, don't celebrate just yet. It can retrace. Okay, and this upward movement, because it just go like exponentially steep, it is very steep, so that I have to tell myself, if a stock can go up like this, okay, one day go up 10%, 20%, it means that it can also retrace in that magnitude. So that's why I'm not overly obsessed, or I don't celebrate like too high, okay, when the stock went up a lot and I haven't tapped profit. Okay, I treat it as an buffer. Okay, I treat it as a buffer when because I expect the stock to pull back in the same magnitude as well. So that's why sometimes managing your emotion, okay, is very important. Okay, a lot of people celebrate way too early, and when the pullback happened, they did not expect that to come. That's why they get messed up, they get panic. Okay, when people are panicked, it doesn't mean that we have to join the panic. Okay, if you prepare and you expect the sell-off to come, okay, then you're okay with it. Okay, I know that if the stock were to pull back to EMA 20, I still have how much profit. If it break, I still can take away how much profit. That's what I always tell myself, and that's what I always calculate beforehand. Okay, so that are the 2 cases study that I can share with you, and we are just about to end. All right, that will be all my sharing. So right now I'm pass back the sessions to Shane.
Thank you, Jin Hao, for your wonderful sharing on our trending stock. I think these days a lot of counters are on fire, and these are the fire that is so big that is unprecedented. Even our trading volume is also record high. Every day we break new highs. So while there are so many questions on my screen right now, so let me just take some of the questions. Jin Hao, the first question is MA better or EMA better? All right, I guess you get this question very, very frequently, right?
Yes. The question, the answer is, I just make a quick answer. Actually, anyone is fine. Okay, if you are using 20 EMA and 20 EMA, they are both fine. You just have to know that the shorter you go, and then because EMA is more sensitive, because the way it is being calculated, so you have to know that the more sensitive things you use, the more false signal it may give you. So that's why I just use EMA. Personally, I use EMA. Okay, but if you give me MA chart, I can also analyze as well. Okay, so there's no like which one is better, just personal preference. And I think the most important thing is sometimes some stocks tends to have like support at maybe EMA 20. Okay, you might want to back test. Okay, you might want to back test. Like certain stocks in the US, they can rest at moving average, the MA 150. So you might want to back test a little bit if you really want to nail it like more accurate. But again, this is not like a day and night difference. Yeah.
Okay.
Yeah.
So the next question on my screen is, what strategy should we use when it comes to trading sideways?
Okay, personally, I don't trade sideways, because when a stock is in a sideways, trend-wise, it means that it is taking some time, okay, taking some time to make a choice whether or not you want to be an uptrend or in a downtrend. Okay, so when the stock is in a sideway, usually I don't trade, especially the sideway that lasts for like 1-2 months. Okay, I don't trade. I only trade when it breaks out. Okay, you can refer this chart pattern if you look at the stock AMD listed in US. Okay, recently it has a breakout, so that is the pattern that you want to trade. Ideally, that's I trade. Okay, I trade that kind of pattern if the stock is in a sideway. Okay, I don't want to mess the stock when the stock is in a sideway, but I only trade it if it starts breaking out, showing a direction.
Okay. So the next question is, how do we avoid whipsaw using the EMA strategy?
Okay, so the thing is, whipsaw is when the market is like bouncing up and down. Okay, so the thing is, some stocks can have higher what we call it is more volatile, so that's why it tends to like chop us out from the stock, and then it goes up again, and then when we enter, it does not go up, it comes down again, something like that. And 2018 we have a lot of whipsaw. The one thing that, based on my experience, to avoid whipsaw is don't place your stop loss too tight. What do we mean by too tight? If the previous low is 3 ringgit 80 cents, don't put your stop loss at 3 ringgit 79 cents. Okay, because sometimes market can over squeeze before it goes back up. That's the first thing that I will recommend. Okay, don't put your stop loss too tight. Second thing is, when you are handling stocks that are having like the kind of movement, okay, try not to buy on an extreme rebound. Okay, like it crashed back, like drop 20% and go back up, rebound. One rebound is like 10-15%. Try not to enter that kind of stocks. Okay, that's how I avoid at first place. Okay, if you really want to trade those stocks, try to buy somewhere near the support when it start turning up. That's the point. You can have a better risk to reward ratio. The risk is usually smaller if you consider like you put the stop loss like previous low or EMA, and you give enough buffer.
Okay.
Mm.
So another question on my screen, which a few people ask about it, is what is a super trend indicator and where we can find them?
Okay, super trend indicator is, I cannot tell you the maths behind. You can go and Google, okay? But the chart that you are seeing just now is actually from TradingView. You just go to tradingview.com and you click chart, you will see one beautiful chart, just like what I have shown you just now. You can have access to a lot of stocks in US, UK, Australia, any countries that you can name it. You can even see currencies like futures or FCPO, FKI, everything is in it. Okay. And then super trend is just one of the indicator. You just go to search the indicator super trend without spacebar. Super trend without spacebar in the middle. You can just use anyone. I use the first one. Okay, so you can just go and try. Okay, if you're on a computer later, you can go tradingview.com and you go to a chart, then you go to indicator, play around with it. Okay, it's inside, free.
All right. So only on TradingView, or is still available in any other platform?
Yes, but TradingView is free. Non-broker wise, because I don't think there is any broker in Malaysia offers that. Okay.
Okay.
I think I don't see any broker offer that actually. Okay. I don't know whether like overseas do they provide, but I have been using it in TradingView.
So not so common, huh? So now
Yeah.
the next question is, why didn't you use super trend indicator on Malaysian stocks? Because I think most of the case studies on super trend is on US stocks.
Yeah, actually, not US stock. I only show it in US stocks. Okay, because the reason why I use EMA for the rest of the slide is because I think most of you are more familiar with EMA. So if you want to learn more about super trend, you can actually just go to TradingView and punch in any stocks that you are watching and use super trend and see whether or not this indicator does it like fit your needs.
All right. So the next question is, how do you do back testing? Do you do it manually, or you use the software?
I do it manually. Most of the time I do it manually.
Okay. The next question is, do you take volume into account when it comes to trend trading?
Not very often, but of course, I want to see healthy volume, as in when the stock goes up, the volume is high as compared to when the stock is going sideways or retrace. I don't want to see like big black candle, okay, consecutive few candles with super high volume. So that's at least one thing that I see. But most of the time, trend is still far more superior than looking at the volume itself. Of course, you can also combine with some other some I don't think it's like theory, but some people say that if you're a shooting star with high volume, you might want to take some profit. Yes, it might retrace in short term, okay, but it can also rebound later. So if you sell at the top, you might want to buy back at the bottom. Uh, just control your position. When you see a bearish like candlestick with high volume, in short term, it is like going to retrace, but it doesn't mean that you have to sell all, because if the primary trend is still very strong, definitely you still have a lot of opportunity and room for it to go up. So volume, I would just say primary is price and trend, volume is second.
Okay. Yeah, just one remarks by Ziti Guan. Thank you so much for your feedback. He said that investing.com also provides super trend indicator for free.
Yeah, very good. Okay, thanks.
Thank you for your feedback. Okay, so let me see the next question. How do you decide your position size, Jin Hao?
Okay, position size as in how much I go in, is it?
Yeah, I think for each
think
stock, right? How do you do
okay.
capital allocations?
We have a very specific formula when it comes to it. Okay, I'll just mention, I think I mentioned it last time, but I did not include in slides. Okay, position sizing is like this. Like for example, I want to buy a stock. So usually I'll calculate, the first thing is, what is my net liquidation? Net liquidation is your total stock value plus the cash you have. That's the total worth of your portfolio. Net liquidation times a risk per trade, meaning that how many percent you are risking per trade. For example, for me, I risk only 1% per trade, meaning that if you have a 100,000 portfolio, every time you only risk 1%, it means that if one stock were to hit your stop loss, you will be down by 1,000 ringgit. So that's what I call risk per trade. Okay, so I use 1%. So when you use 1%, you use 1% across all your trades. So for example, 100,000 times 1% divide by your entry minus stop loss. So if your entry is like 955, your stop loss is like 885, you just minus and then you do the math. So that is the initial position size. That's how we calculate it.
Okay. Do you do intraday trading? If yes, then what indicators do you use?
I don't. I ride a big trend. When I buy a stock, I can hold until very long. It can be like 3 months, 6 months, or even 1 year. Last year I hold Penta for almost 1 year. So I don't do intraday as far as stock is concerned. But if you want to do, you can still use whatever EMA you are using, but the only thing is you have to use smaller time frame chart, like 1 hour chart, or I personally don't find that like 30 minutes chart is very helpful unless the stock is very liquid and volatile and has a lot of volumes. For stocks, I really don't day trade, because sometimes the volumes and liquidity is not consistent.
All right. So the following question is, how do you select stocks that have good uptrend? And then is it according to the theme, or is it just according on the price action? Like theme, like what I think what she means is that like the healthcare theme right now, or tech theme right now. How do you pick stocks that have good uptrend?
Okay, the first thing is, of course, team. Let's just talk about team. Team definitely plays a role. Okay, when healthcare and glove is in a trend, you want to have some or at least one stock in it. And when the tech is in play, you want to have maybe a few stocks, because technology sector is a big sector. You have a lot of subsectors. Okay, you might want to have a few, and I think one is like packaging, like SCGM, Tiguan, Sintex, all these are under packaging. So you might want to have one if that sector you think that it is having the team. Okay, it's always follow the team. And I have one personal rule. When I follow a team, I usually look at the big brothers first. Like for example, Glove, I look at Top Glove and Hata Trade. That's my primary choice, because I enter stocks and I don't really want to sell it like next day or next week. So I usually follow the leaders. For example, last time Metal, I follow P Metal and Anju, because one is the big brother of steel, one is a big brother of aluminium. So that's how I usually will start my analysis. Okay, I will base on there first, but not all the time like the big brothers are doing well, but I will start from there. And the next thing is how do I select stocks? The first thing is, of course, all the EMA must be in sequence. Okay, very rare I will trade stocks that are below EMA 200. So usually I want the stocks to be the EMA 20 above 50, 50 above 150 or 200. That's the first thing. Second thing is, I want the stock to have a nice historical healthy rally, meaning that in the past it has gone up like steadily, like maybe like for 6 months or 1 year it go up like 100%, something like that. I will prioritize those stocks. Okay, so that's the reason why I'm personally in Hata and not other glove stocks. Okay, so that's my personal choice. Okay, so first thing, most important thing is EMA must be in sequence. Okay, so another thing is, I also want the trend to establish itself, meaning that I usually do not buy when there is a downtrend just turn up. Usually I would not. I'll usually wait the trend establish first. Okay, meaning that from maybe the bottom to where it is right now, it has gone up by about maybe 30 to 50% or even 100%. Okay, I want a trend to establish first before I thinking of getting in. You might think that it is too late, but let me tell you, it is not. Okay, it is not. You see, when I buy Hata at 6 something and 7, the bottom I think is around 4. It has gone up quite a fair bit. Okay, but again, nobody can buy at the most bottom. Okay, so that's just a reference point. We want the trend to establish itself first.
So EMA is very important, and then you like the market leaders. So that's your strategy.
It's not strategy, but my personal choice.
Preference. Yeah. Okay.
Preference.
Preference. All right. So the next question is, I have a paper loss of 50%. So how would you cut a paper loss of 50% stock?
Okay.
Would you still worth to cut?
Okay, I face a lot of this question, and usually it will come to a point whereby that trader have to realize that letting the loss grow bigger is not the way of doing it. Okay, it is painful to cut, but if you are committed to learn the right way, okay, just cut it. Okay, it is very painful, and cut it and learn the right strategy, the right way. You cannot be like cutting it and then you still going into downtrending stocks, because if you have 50% paper loss, it most probably means that you are in a downtrending stocks. So usually I would just say it's better to cut it and then like restart your trading journey by learning some other methods or some other better ways. So it's painful to cut, I understand. Even my students, some of them, they really go through this process. Like, it's very painful, but you have to do it, because if the stock has already go down by 50%, you need the stock to go up by 100% in order for you to break even. The question is, if the stock can go down by 50%, do you think it is still possible for it to double the price? It is still possible, but definitely it is not a 1 or 2 days thing. Unless you are looking at a 1 cent or 2 cent stocks, now it's a different thing. But if, let's say you are in Air Asia X, for example, those stocks, or Air Asia, okay, so or some are downtrending stocks, okay, that I cannot name right now, cannot recall any. The thing is, those stocks, if you want it to recover back to where your buying point is, your cost is, it has to go up by 100%. I'm not saying that they cannot recover, but definitely it will take some time. So I think that it would be faster if you can just cut it, get back whatever your capital is, learn other strategy and follow the system, the strategy, okay, practice yourself to be a better trader, and it is faster to earn back 100% from other stocks rather than waiting the stock that has crashed 50% to recover back. That's all I can say.
Okay. So let's do one more question, which is, if a stock has become non-trending, trending, because just now you were mentioning like downtrending stocks. For example, one sector become from trending, turn to become non-trending. For example, oil and gas. Is it better for us to cut loss or wait for it to rebound? So
Better
your
to
idea
cut
is cut,
if it hits your trailing stop, meaning that when you see the chart, there's already a structure break, meaning that it breaks like maybe 20-day EMA or 50-day EMA, or it break previous low, or any things that you are using. It can be a Ichimoku, it go below the cloud, you must sell because it's definitely not in trend anymore. But if the sector is not in play already, the team is gone, but let's say maybe the glove sectors, for example, is not in play already, but possible there might be still one or two stocks that are still holding above the 20 or 50 days moving average. In that case, it means that there is no sell signal yet. You might want to continue holding, or you sell half, so that you sell half, you take that money and trade some other stocks that whereby the smart money, the hot money is inside.
All right, excellent. Thank you so much, Jin Hao, for your excellent responses during these question and answer sessions. So before we conclude the session, just let me do some announcement, which for those of you who have not had a Kenanga trading account, you can fill up the form here. The link is already dropped in the chat group. You can go to www.kentrade.com.my /open-account-form to sign up a Kenanga account. And if you're a newbie, you need a trading account, sign up one with Kenanga. If you already have a trading account, if you want to open another one, you can also find Kenanga. The friendly brokers will, the friendly dealer and reminder will serve you. Okay. So our next webinar is titled "How to Profit from Melt Up, the Final Leg Up in the US Bull Market." Wow. That is final. Is that final? Okay, let's find out in the next webinar with Derek Tan. The date is 27 August 2020, which is Thursday, and 8:30 to 9:45 p.m. The registration link is already put into our chat group. So please go there and register yourself so that you won't miss our next webinar. Even if you can't make it, register anyway, because a recording will be sent to your email address within 24 hours after the webinar is over. So block your calendar for 27 August, where we'll talk about the final leg up in the US bull market. Thank you so much, Jin Hao, which is the founder of Street Finance, for sharing your insight with us on how we can do trend trading in not only in the Malaysian market but also in the US market, using the EMA strategy and do adequate position sizings and having a strong mindset and methods. Thank you so much for sharing your idea, Jin Hao.
Welcome. Thank you everyone for joining us.
Thanks everyone for tuning in this webinar evening. So this is Shen Chu signing off, and I will see you in the next Kenanga webinar. Bye-bye.
Bye. Thanks everyone. All right.